Hello again, Mike Butcher with TechCrunch. Is this thing on? Hello? You guys can hear me? Oliver Samwer, you know, it's fantastic to have you on a TechCrunch stage. Our first encounter didn't work out so well. We tried to have a meeting, and I think there was a misunderstanding about our interview, but anyway, it's all in the past now. But it's wonderful to see you, and you have obviously incredibly successful story. Rocket Internet is, frankly, one of the most successful, if not perhaps to some extent, the most successful internet company out of Europe, and you've achieved a great deal. Last year, you had the largest IPO in the tech market since 2007. But let's talk about that, because since then, you've lost a lot. You've lost 46 million euros this year. The valuation of Rocket Internet as a holding company, which has many different operations, has dropped by 30%. Very simply, why do you think that is?
I think first and foremost, I think we are a unique company. We are very complex because we build businesses from scratch. We go across 120 countries in the world. We go across 4 or 5 sectors: e-commerce, marketplaces, financial technology, travel, mobile on demand. We have at its core roughly 400 people, but around the world in the group we have over 35,000 people. So basically, I think the only way to really understand Rocket is if you look deep into every single one of our companies. And so on average, probably it takes 3 times as much time for an average analyst to understand a normal internet company. It takes a lot longer. And I think if you look at our last 12 months, we've been 50% up IPO price. Currently, we're trading roughly 30% below IPO price. I think everyone at Rocket has a very long-term view. Our companies are still relatively young, and I think you see it with great companies that came out of the first generation of Rocket, Londo. They're already 50% up from IPO. They're probably the first $10 billion internet company almost coming from Europe. So I think certain things just take time, a little bit of patience.
Does that mean you're asking investors to be patient with you?
I'm not asking investors to be patient. I think I'm telling that the management team is very patient. And I think we gave our investors a very clear guideline when we went public. For an e-commerce company to break even takes 6 to 9 years from the start. A marketplace, because of these less capex, needs 5 to 7 years. And a financial technology, 6 to 8 years on average. So we gave them clear guidelines, and I think we have a very low liquidity. That means very few people at all are basically selling shares. So I think most of the investors who bought with us are still with us.
But how do you explain the lack of lack of opacity in the structure of some of these companies? Because, for instance, you're an investor in Rocket Internet's an investor in Affirmatos, which is invested in two or more dating apps: Shopper Man, which is a bit like Bumble, eDarling. You have subsidiary companies under Affirmatos for Jades, Brilliance, Jewels, and that's just under the companies that you've invested in, the company you've invested in. Why do you feel you need to have this kind of structure?
I think if you look historically, there was always a reason for the structure. Because, for example, we had several businesses in several different geographies, and there were investors who only wanted to be in the Latin business or only in South Asian business. If you look since October 2014, since we went IPO, the structure gets, I would say, every 6 months much less complex. Because basically now most of our business are across all the regions, and basically we have less of the outside investors that we need in the very beginning. I think it's just grown with history.
Do you think that your backers, because now you've raised many billions of dollars, when you famously go out and raise money very personally, don't you? You've got Kinnevik in Switzerland to back you to the tune of I think about $1 billion. You're extremely one might even say a little aggressive in the way you raise money. Are your investors backing you, or are they backing the business model of Rocket Internet?
I think I'm now working in this industry since 1999, so almost 16 years. I think very few people have shown probably the same consistency of internet successes. Doesn't mean everything works, but a significant number of companies that we've been building and investing in have worked, and I think the current pipeline also looks very promising. I think people back, first and foremost, the business model. Secondly, I think the people who are involved. I think if you've ever been to Berlin, you might have met my colleague Alex, who's working with me, Johannes with a background at Google, Peter with a background at Goldman Sachs. I think since basically our last meeting, or basically since maybe 2007, since we started Rocket, I think we have built a management team in many, many countries of the world, in many functions, that is giving us a background for the Rocket of today.
But do you still find it easy to attract talent when Rocket famously doesn't have quite the same share structure as a lot of other internet companies? How do you incentivize people who are often almost essentially employees as opposed to founders?
So I think in the end, you optimize for the likelihood of success. Yeah, I mean, if you look at success, it's a question of likelihood and total outcome. If I give you a startup and basically I give you 90% of that startup as it's a tiny mouse startup that basically doesn't make it for many, many reasons, maybe the idea, maybe the experience of the management team, maybe the financing, maybe the technology. I think in the end, 10% of the right company, 20% of the right company, 25% of the right company can be a lot more. And I think if you look at many, many founders, I think there are very few firms that probably have helped to create as many millionaires as our firm. Obviously in America, you say the same of Microsoft or other companies, but I think let's all keep in mind this is Europe, and I think within Europe, I think it's quite significant progress.
So in other words, what you're saying is that come and work for Rocket Internet and although you won't be a founder in the sort of Silicon Valley sense of the word, your business model means that you can replicate, critics have called it cloning, very, very fast in an iterative manner, and that they'll end up with, a much more, almost a guaranteed result. Is that what you're saying?
I think we built a platform or a factory for as high as you can probably get consistent internet success. And I think it has done well for the ecosystem. It has done well for the dozens or hundreds of founders. It has done well for Rocket and its investors, for the individual investors. And I think that's what we're going to do in the future. I
was speaking to some investors recently about Rocket Internet and its strategy. And what a lot of them are confused by is how your investment strategy in terms of what you double down on and what you're getting out of. Because as far as we can tell, you pulled the IPO for HelloFresh recently. You pulled the Food Panda out of Vietnam recently. Are you getting out of the food market now? Have you lost faith in it? Do you think it's too competitive? And what are you going to double down on now going forward?
So first and foremost, we love the food market. We believe it's the largest e-commerce opportunity there is. It's by size the biggest. It's the lowest penetrated. I think those are all very different actions. If Food Panda decides to withdraw from Vietnam and to focus on whatever its other 35 markets, I think it's a very entrepreneurial decision. It seems to be the right decision. In the end, it's the decision of the management team of Food Panda. The same is true for HelloFresh. When exactly HelloFresh wants to go public, that really depends on the same way as a captain decides when his ship should be sailing. The company has enough cash to break even. The company has a great business model. The company is a global leader and everywhere in its subscription-based food space. And I think where do we double down? We double down on the new frontiers, meaning food, on home and living, on emerging markets when other people go back, we double down on new opportunities like mobile on-demand services. Many of our services are present in London, making good progress. on fintech, financial technology services. So I think we are generally optimistic for transaction-based internet models, and that has always been our core.
So one of the criticisms or one of the concerns about the HelloFresh IPO was that it had a too high a burn rate. At what point do you decide that one of the companies that you're involved in has a burn rate that's just too high?
For every one of our companies, the moment we launch them, we have a clear path where we say, okay, within those limits, this company needs to break even. As I mentioned, e-commerce 6 to 9 years, marketplaces 5 to 7. So if you look at HelloFresh, it's roughly in year 4. So I think it's very good on track to break even within a 6 to 9 year period. And I think if you look at the company and the track record and the traction of this company, I think you will clearly see that this has a very, very big potential and be hopefully another hidden champion in Europe.
Yeah, you're extremely good at raising money, and you've created a very successful business. In terms of, is there any category you would not enter? For instance, do you feel that if you had enough money, you could take on a company like Uber, for instance?
I think you always should choose your battlefield. I think to basically compete with a company of Uber, I think exactly in the same countries, in exactly the same model, would be probably very challenging. So I think we basically built our own model that basically you need to choose a model that has network effects more within a country instead of globally. Secondly, basically models that are not too cash intensive. Thirdly, basically a lot of other factors come into play, and I think we try to avoid battlefields that are too intensive.
I'm glad that you raised that language. Some of your language is often quite military. Is that a culture in your company?
Even if you would like that, it's not a part of the culture. So I should say then you should choose your country.
I'm just thinking of a famous memo you sent once, which had quite militaristic language.
Didn't you say this is going to be a nice interview, Mike? So if you ask about that, I think, as I said, I worked in this industry in 1998. I think I wrote this email in 2010, 11. So since then, I've grown up.
Do you feel that you've matured as a business, as a manager, as an
I think I shouldn't mature too much, but I matured, yes.
You've matured. Yeah, clap if you want. One of the things actually you are really often associated with this is really creating businesses in emerging markets. You're deeply into Africa, Asia, Latin America, Myanmar. You have the hotel aggregator for Myanmar. You have incredible number of, you really do sort of throw it against the wall, don't you, in those markets? I mean, in a way, let me be frank. Isn't this just simply, it's a land grab. It's a land grab with business models which work already, and you're going into immature markets, developing markets. Is that really innovation? Is that really good entrepreneurship, do you think?
I think every person who basically doesn't just become an employee anywhere, but basically gets up, creates something, let's call it from scratch. There wasn't any employee, there wasn't any business. And then later you visit that company that has 10 or 20 or 50 or 100 or 500. I think basically if you look at entrepreneurship, I think one piece is the idea, but to get it done and to get it done in a sustainable way, I think is a very different one. And if you look at emerging markets, if it were so easy, just go and recreate in Nigeria Amazon, or just go to Indonesia and recreate Rightmove, or go to Myanmar and create Booking.com.
But this is the sort of thing you've done.
Then I think a lot of people would have done it. Yeah, I think fundamentally in all of those markets, you need to solve so many issues, be it logistics, be it warehouses, be it employment issues, being internet access issues. Yeah, you can't use the same app everywhere. Yeah, you have everywhere daily challenges, and I think that's what makes a true entrepreneur is basically that you're also to some extent maybe an adventurer, and you go where most other people have not gone.
I was looking at some of the companies you've got in India, for instance, Tripdar, Vimdu, Coupon Nation, like Groupon, Courtesan, Vimo, Sparklist is the Wallapop-like company in Pakistan. It's a massive number of companies, all doing, some of them doing similar things. And that's the interesting, is you seem to back several companies in one sector. Why don't you double down on, one of the bigger companies, one of the bigger sectors, or one company?
So we rarely have the same kind of business model in the same country. Doing emerging market food delivery business is very different than doing it in mature markets. The same as e-commerce. Southeast Asia, Lazada in itself is a 550 million inhabitants. Should they really work that closely together with something very far away in Latin America? No, I think it makes sense for countries or for companies to focus on regions, to focus on a number of countries, and they can. But if there's another model in another country, we would also. I think the 70 companies that have in our portfolio, I think it's more like a testimony to the great opportunities out there, and I think the consistency of the Rocket platform.
Have you ever come to the point in your career to date where you really felt you were close to failing entirely?
Of course, often. I think in 16 years we've been very often close to failing a particular business model, failing in attracting enough customers or attracting enough suppliers. I think that's part of daily life on entrepreneurship, that basically 95% it's about challenges and solving them. But I think we've always been able to get up, and I think we're still very hungry for the future.
I think that's very interesting about you, because you've been so successful. You're a multimillionaire, billionaire many times over. What drives you? What gets you up in the morning? Why do you have this drive? Why do you keep coming back?
I think we were the type of people that always wanted to become entrepreneurs. And in 1994 and 95, in Silicon Valley, it was in 95 for the first time, we felt that's our industry. Because before, in every other industry, people told us you have to go and learn 10 years the aircraft industry or the airline industry at Lufthansa, or you need to go for 10 years to work in a retail store to learn retail. And I think we felt that people in America were young, so maybe if they have an advantage by being young, maybe we can do the same. And I think until today, I think that's the most exciting. You come to a country, I recently visited Philippines, and you suddenly see 400 people. When you did it 3 years ago, said Philippines could be a good country, there was nobody in our parts of the companies. And I think that makes you very, very happy.
In a way that you famously created an eBay-like company called Londo many years ago, and famously sold it after trying to get eBay to launch in Germany and be part of that team. 100 days later, you sold Londo to eBay for over $50 million. Is your strategy a sort of revenge against Silicon Valley for not bringing you in to the fold and not saying, come and join us?
So first of all, there's no revenge. Honestly, I'm not focused on that. There's no time. No, I think we've decided for ourselves that we would like to live in Europe, that we would like to work in Europe and many more markets. And I think hopefully basically what we have done and what many other entrepreneurs that come to TechCrunch will serve is that basically there are also good entrepreneurs in Europe and good entrepreneurs in the Philippines. And as you can see now in India and Malaysia and in Africa. And I think going forward, there will probably one day a TechCrunch Global, where you won't make the difference between a European and a US company anymore, but they are all global companies, and hopefully also the percentage of American versus non-American Chinese companies also increases, so that it shows that there's a lot of entrepreneurship being born over here.
Do you feel that you're much more of an internationalist in your take on entrepreneurship?
I think, yeah, we're a tiny international entrepreneur.
You invested in Facebook early on in 2008. You put $10 million, but you only took out $50 million a couple of years later. Do you regret that?
As failure is part of everyday life, we also regret of selling too early. Probably it's our biggest mistake in many, many of the years. And I think that is the power now as a public company. We have the means to own more of our winners and to keep them longer. And I think if you look at the first 16 years of our life, we sometimes had to sell them too early to find the next, or to finance the next companies.
What's next for Rocket Internet? What do you want to do in 2016?
I think the key thing is, and what we've learned about the public markets, is to deliver consistent story and to deliver basically, or on this consistent story, to deliver consistent results. And I think that will be our key focus. I think it's not about 2016, 17, what are the surprises? It's more about delivering what we promised, growth, an accelerated path to profitability, enough cash to bring our companies home, and to start a number of new companies.
And I could safely say that you're in this for the long game, right?
I think there you can bet on. We meet again.
Good. Well, in front of all these people, can I get your commitment to come back to TechCrunch Disrupt?
Yeah, I have to look if it was a really nice interview, but I try. Yeah. Of course I come back.
That's good enough for me. Thank you.